How's it going, everyone? It's Sam. A lot of people are worried that a lot of crypto is about to hit the market with Mt. Gox. We got some news on the release schedule for 141,000 Bitcoin. We also have an update on Michael Saylor. Apparently, he did something illegal, which we will talk about, and a lot of people are worried that he's going to dump crypto on the market. There's a lot of fear in the market here today, and there's so many different bearish articles. I want to go through a lot of them and then talk to you about the silver lining to all of this. So stay through to the whole video because there's going to be a lot of information on here, a lot of tabs pulled up, so we have a lot to cover. If you don't mind hitting the like button and subscribe button so you can get future videos, I really do appreciate that. I have probably the most in-depth video that I've done in months coming on the channel either tomorrow or Saturday, and it's going to make a lot of people a lot of money, so definitely hit that subscribe button. And I do want to thank Margex, but we'll talk more about that later. Let's take a look at the market. We're down about 2% here today. A lot of fear is in the market. A lot of crypto YouTubers, too, are talking about the bloodbath that could happen here over the next month. And maybe for a good reason. When there's a lot of fear in the market, people generally try to talk about the fear. They try to talk about what's going wrong in the market. And you can see there's a lot going wrong, right? The Nasdaq's down 2% here today. And we've been falling down and down and down after Jackson Hole. So we talked about that on the channel with Jerome Powell, what he said. Really nothing that we weren't expecting from Jackson Hole. It just reiterated the fact that we're going to continue to raise rates, and it sounds like they're going to be more hawkish than people expected. And this is really hurting crypto because crypto is thought of as a high risk, high reward investment, and it's really bad with increasing rates, especially when we are timing that at the same time as a global recession, and we're also going into a bear market. So a lot of things coalescing and a lot of things coming together at one time. And we also have titles like this, right, where Michael Saylor was really the face of Bitcoin for a long time, and now he's facing a tax fraud lawsuit. Why it's bad for the stock and Bitcoin. So we have a lot of titles like this as well. Now, if you don't know what happened here, basically what they're saying here is that Michael Saylor bought a house in Florida, kind of registered through the state because they don't have state income tax, but he spent most of his time back in DC, and now they're suing him for $25 million in taxes. This isn't that much to him. Obviously, he's worth a lot. I mean, he's worth $1 billion plus, or at least that's what he was worth at the peak. Maybe he's worth more like 400, 500 million right now. Maybe 300 million. But the fact is, this still isn't a lot of money to him. So even with this large amount of taxes, he can still pay it if he has to. So I wouldn't be too worried about that. But you can see that the overall market is down too. And I think that's what's really causing the sell-off in crypto. Over the last 5 days, just the NASDAQ is down almost 10%. If we go over the last month, since mid-August, we're down nearly 12%. So we had this little bit of a rally from the depths down here, and now we're going right back to kind of where we were. Now, we aren't as far down as we were back in June, but you can see that we're starting to get there, right? We're starting to fall back down. At the same time, this is when we have one of the worst months in crypto, September. You can see that it has a lot of red here. Now, it's not very substantial red. It's not like 40, 50% decreases, but we still have a lot of negative 5%, negative 10% months in September. We also have Mt. Gox. A lot of people are worried about Mt. Gox, worrying that we're going to have a lot of Bitcoin sold off after this gets released. And if you don't know, they were a cryptocurrency exchange that lost a lot of crypto. 141,000 crypto, though, has been found, basically, and is going to be paid to the creditors, some of the people that lost the original 850,000 Bitcoin. Now, they just announced that they'll have until September 15 to make or transfer a claim. This is for the creditors. So a lot of people have been reporting that we were going to have Mt. Gox release 141 Bitcoin this week or next week. That's not going to happen. They have until September 15 to make or transfer a claim. So that's 2 weeks in the future. And then even then, I think it will probably be delayed. There will be a slow trickling out of the Bitcoin. It's not like one day they're just going to, on September 15, release 141,000 Bitcoin to everyone, and it's going to go super smooth. Obviously, that's just not how these things work. I wouldn't be surprised if it took several more months or next year. And even then, if we have 142,000 Bitcoin, these are people that have held onto Bitcoin for years. They were some of the early adopters, people that probably are more likely to hold on than to sell. Now, we still will get some selling pressure. I'm sure some people will be like, hey, I got 2,000 Bitcoin. I'm going to sell half of it and keep half, and I'll come away with, millions and millions of dollars. I would not be surprised if that happens, but I don't think it will make as much of a splash as people expect. I wouldn't be surprised if the Fed continues to raise rates and this Bitcoin gets released, if that's really the depth of the market, either leading up to that point where there's a lot of fear priced in that people are going to sell this, or when they actually do end up selling it. That's just my thought on it, but I could be wrong. Now, with all this thinking that we're going to go negative, it makes you wonder, are we actually going to see it? Usually we do the opposite of what people are thinking. So if everyone's claiming that we're going to fall from here, are we actually going to fall? We have a really strong dollar right now, something that we haven't seen in 20 years. We have the Fed speaking really hawkish, but the question is, are they going to be that hawkish, or are they trying to price this in so people aren't spending as much money and inflation comes down even further? And we do have some other silver linings as well, but first I want to thank Margex. Now, a lot of traders are having a hard time making profits in this kind of market because it's so unpredictable. So how can you make profits in a bear market? Well, you can diversify your strategy by longing and shorting Bitcoin and other cryptocurrencies on something like Margex. Margex is a Bitcoin-based multi-asset trading platform where you can earn profits by longing and shorting positions even in falling markets. Bitcoin and other top cryptocurrencies are available on up to 100x leverage. There's no KYC, and it's also been nominated by finance magnates as one of the most user-friendly trading platforms. Margex also offers something called an MP Shield, which is a system that protects illiquidity and price manipulation that can often flash crash prices and cause people to be liquidated very quickly. Now, Margex is giving you an exclusive bonus to try leverage trading without any of the risk involved. All you have to do is sign up with Margex with the link in the description. Go over to the wallet section, use promo code FRIEND100, and you can get up to $100 of free funds to trade and start testing your trading skills. Every Margex user can trade Bitcoin, Ethereum, Litecoin, XRP, EOS, ADA, Uni, Sol, up to 100x leverage. The minimum deposit is only $10 and the minimum trade size is $1. Keep in mind that leverage trading does have risk. That's why you have to trade with small amounts that you're comfortable with. That's why, again, it's good to use that $100 of free promo code so that way you can try out your trading at first. You'll never see any hidden commissions on Margex, and all deal indicators are on screen. Users can pick between cross margin and isolated margin for each trade. Cross margin shares the trader's available balance among all the leverage positions that use cross margin, either by using the pen or scrolling all the way to the left with the slider. Margex's trading fees are very competitive with other trading platforms, especially considering that MP Shield. And you can deposit a ton of different cryptocurrencies to start trading today, from Bitcoin, Ethereum, USDC, DAI, Tron, and Polygon, and even more. And then one last time, just a reminder, when you use the link underneath the video, you can use the promo code FRIEND100, confirm, and then you get that trading $100 for free to start trading today. So we went through a lot of the negatives there, a lot of the fear in the market. But don't forget, we have CPI coming up here in just a few weeks, actually less than a few weeks. Then we have the Fed meeting in September. Now that could go one of two ways. Either we continue to see inflation, or it doesn't fall down as much as we expect, or it starts to come down. Now, if CPI is coming down pretty substantially and beats analyst estimates of where CPI is going to end up, or comes in lower, I should say, than what they're expecting, I think whether the Fed raises 75 basis points or 50 basis points won't matter as much, because what people really want to see is the CPI come down. Now, how that affects your portfolios, how institutional investors manage their money is based on the Fed funds rate. But if they continue to raise rates, but we start to see CPI come down pretty substantially, the fact is they just won't have to raise as long. So I think that's really going to be the most important thing to watch. Now, there's still going to be a lot of volatility around the Fed meeting, and what they say about raising rates. But the fact is, this, I think, is more important than what the Fed does, because that's going to determine what they do going forward. And that's what the market's really worried about. Are they going to continue raising rates all year? Are they going to raise by 50 basis points every time? Or are they going to raise pretty substantially this next meeting and then start to trail off? We also have the Ethereum merge. So if this goes smoothly, I think it will be very bullish for Ethereum long term. You can still see that there is a lot of progress happening even when the market's down. So the fact is, it's just going to be better and better for the next bull market if this continues to be upgraded and improved. We also have the Vassal hard fork. This is Charles Hoskinson recently saying that they're going to probably have this update go live at the same time as the Ethereum merge. Now, it's been pushed back, so I'm not sure if this is exactly true, but this is another cryptocurrency that is giving updates and progressing forward even in this kind of bear market. So just another good reason to want to add or at least hold, because the underlying cryptocurrencies are getting stronger and stronger even if the price is not reflecting so. Now, we're also pretty far below the 200-week moving average. When we look here, we are at about, let's go back here. We're at 19,750. The moving average is over 23,000. This is even just as of 2 days ago, because this doesn't update every day. So the 200-week moving average is at $23,150. That's about 20% above the price that we're at right now. Typically, we do not see this. If we look back in the past, we rarely see any drop below the 200-week moving average, but typically it's not substantially below either. Typically, we see just barely dropping below, and then it pops right back above. So back here, we saw it down to about 5,000 or so, and then we saw it jump up pretty significantly throughout 2020, obviously, and 2021. But we were down below it about 10 to 20%. Now we're down 20%. So this is pretty much worse, or this is worse than the COVID crash in terms of 200-week moving average and the price that we're at now relative to each other. This is the same thing if we go further back. Typically, we don't see the price go that much below the 200-week moving average. Here, we saw it go $3 below, which is less than 1%, or just about 1% below the 200-week moving average. So again, just another historically good time to be buying. And then we have a lot of big companies working in the background too. Charles Schwab follows Fidelity, BlackRock in creating a crypto ETF. BlackRock joins Fidelity and Vanguard as a Bitcoin mining investor. BlackRock Fidelity to invest in crypto firm Circle's $400 million funding round. Fidelity allows Bitcoin in 401ks. BlackRock is also looking to offer this to institutional clients. There are a lot of companies that are going to offer this in retirement accounts that are just going to be held for the long term. They're just going to have a small allocation and continue to buy. So I think at this point, we have to remember markets can remain irrational longer than you can remain solvent. So that's why I've been dollar cost averaging, and dollar cost averaging kind of slowly all year, just like a very sustainable amount. And eventually, if my income goes down far enough, I could have to reduce that DCA. But right now, it's a pretty good amount for me that I can continue it for a while. But I also have cash on the sidelines in case we drop down pretty significantly. And the reason for the cash on the sidelines really isn't just for that, but it's also for peace of mind. It's a lot easier to hold when you have more money to dollar cost average. So that's just kind of the silver lining. As Bitcoin falls down in crypto, there's a lot of building that's happening in the background. These strong cryptocurrencies will get even stronger and carve out more market share, and the weak cryptocurrencies will fall off the map. When we come into the next bull cycle, we're going to have a lot of excitement, and we're going to be the ones that are cautious. We have our head on our shoulders, actually taking profits along the way. And the fact is that now is the best time to be dollar cost averaging. If you're looking over the next 5-10 years, this is the lowest price you'll probably see, or close to the lowest over the next couple months. These are going to be some of the lowest prices you'll probably see over the rest of your life in crypto, unless something goes drastically wrong. Now, on to one other piece of news I thought was really interesting. Just another reason why you might want crypto, because it's not manipulated by the government or by government employees. We had Nvidia stock falling about 8% today after the U.S. government restricted the chip sales to China. And this is for AMD too. I believe they did the same thing for AMD. This is obviously not good for these stocks, but what was so interesting is last month we had Nancy Pelosi's husband sell shares of NVIDIA, and he actually took a loss. A lot of people were wondering why this was, because he sold, and he sold at $165 per share. The total loss was $341,000, and everyone was kind of wondering why that was. He sold back here, somewhere in here, 165, and then the price actually went up. It went up like 15%. But now with this news, we're actually down about 17%. So just another time that the government and government employees are able to get information. Most likely, I don't want to accuse anyone of anything, but most likely getting information way before us, way before the average investor. So if you can't get insider information, if you can't be part of the government and figure out what they're going to do a month ahead of time, you have to plan things out in the future, see what's growing in popularity, see what is undervalued, and I think that's where cryptocurrency is a great option. Now, of course, I could always be wrong, but when you see so much good news happening in the background, then you see so much fear at the same time about price, but not about the underlying asset, not about the value of the asset, just a lot of fear about where the price is going to go. And when all that's coming at the same time, I think that's really a good time to be buying for the long term. Now, again, if you're hyped up on this, just remember the markets can stay insolvent longer than you, or can remain irrational longer than you can stay solvent. So just be careful. Thank you so much for watching. I really do appreciate it. Again, hit subscribe because I have a great video that I'm so excited about for tomorrow or Saturday, and I'll see you in the next one. Bye.